Mike, this market is weird for people who are trying to trade it. But for those who are in for the long term, what message do you think that the recent action sends? And what are the themes, maybe technology-wise, innovation-wise, that people should really be focused on?
Well, I think, look, e-commerce and marketplaces are getting hammered right now. Last time I was on, I talked about a bumpy ride that was ahead, and I think we're starting to see that. Yesterday, there was a false sense of hope that surrounded this idea that there wouldn't be an aggressive rate hike in the future. But I think the reality set in that we're in the middle of a long deleveraging cycle that's going to continue to be painful. In addition to that, you've got obviously inflation and labor issues. So I think you've got to buckle up for a bumpy ride ahead. I do think there will be names that will long-term make it out of this. For example, Amazon is a long-term hold. They face a lot of headwinds now. They are priced very aggressively, but it's hard for me to imagine a future 5 years from now where Amazon isn't a really valuable company and continuing to increase market share. Similarly, Shopify, some of these other names, you could build a long-term bull case. So you have to pick very carefully. And at the same time, you have to ask yourself, some of these stocks that you might have been holding on to as glamour stocks, are they worth as much as you thought they were last year? A lot of these companies are trading at lows that they haven't seen since 2020 or even right after the pandemic.
Yeah, we're going to talk more about Shopify, I'm sure. A little bit more on that, because Shopify this morning is down around 400, which coincidentally is where it was at the beginning of 2020, pre-pandemic. So all that talk about the world has changed, all of this e-commerce progress has been made within, 5-10 years, within a short period of time. If any element of that is true, and if investors are able to correctly identify, if not winners, companies in a strong position, does that mean there are bargains to be had here with all this doubt?
I think the one big caveat I'd place on that, generally, that line of reasoning is true, that there are bargains to be had, except the one thing we weren't facing in 2020 when we started this big acceleration of e-commerce. It's very real. People's metrics, DoorDash did several years of progress in a few months. And a lot of companies in e-commerce saw that. The one challenge is that was in a very loose monetary environment. And it's very hard, no matter how much organic growth you have, to face both a difficult interest rate environment and increasing inflation that will eventually put downward pressure on consumer spending. So that's the challenge, is this entire market was priced in 2020 under a different premise of loose monetary policy. And I think the environment we're facing now, it could still go a lot lower. So you've either, if you're trying to day trade and if you're trying to call the bottom market, that's notoriously difficult. If you have a long-term view, you can build a case around a few specific companies. If you have a reason to think they've got a defensible long-term moat that will give them advantage, and we can get into specific companies if that's helpful.